Hi everyone, I'm going to do a video here on the daily time frame. We've got a few new members, and they're interested in the daily time frame. So I'm just going to show um, a basic daily time frame strategy, and in essence, it's exactly what I'm doing currently on the 4-hour charts as well. If you are new, the first thing you should do is go to the Facebook group, and if you click this link files here, that is in the downloads here, the flow checklist PDF, which is like a basic trade plan. So you should download that first, because that will help you along the way. So let's go back to the charts here, and let's get my I'm not going to skip the drawing tool actually. So entries first, we're looking for a change in color, bar change in color, and when we've closed bearish, we're looking to sell a breakout of the low. Okay, so we've closed down here, we've had a change in color, and you set your pending sell below the low, and I leave a bit of space. Always give some space to your trades. My stop loss, you want to put it over the high. This is the kind of swing high here, so again, give it some space. Okay, and as you can see, we triggered into the trade there, and now we're short. Okay, now when you're short, okay, sellers have come into the market, you're short, you only want to manage this trade when there's evidence that buyers are coming into the market. Okay, and for that we're looking for a close up. Okay, so we see we have a close up here. That's a valid buy. You'd set a pending to buy above the high with a stop going under the low. Okay, now at this point is where you have your options to manage your existing trade, and you have two basic options really. You can either take profit on this short, okay, and take the long, or you can hold a hedge. Okay, and there's various ways that you can take profit as well. You could just close the trade at the close here, take profit, and then set your pending long. Okay, or you can set your pending long and move your TP down to the same price, so you only close out your short if the long triggers. Okay, so really your two options are to hedge your trade or to do a stop and reverse. Now there's various other options you have got in there. I mean, you could set a pending long and just move your stop to break even. You could set your pending long and just lock in half your profit. I mean, there's a myriad of options, but the basic two options are either to hedge your existing trade or to stop and reverse. Okay, now let's imagine that you just wanted to pick one or the other. Okay, so what you would do here is you would sell here. When you closed up, you could just close out your short, set your pending long. That triggers, and then price reverses, and we would set, I'm going to go to the drawing tool actually now, because it could get confusing now. So now we're in this long here with our stop under a low. We've reversed. Okay, there's no profit to take, so this time your only option is to take the hedge. Okay, wait for the hedge to break out. The long has stopped out, and now you're in a short, and you're waiting for color change again to manage your trade. Okay, so here we've got the color change, close out your short, and now you're back in a long. Okay, and then you're looking for a color change again before you make your management decision. Okay, and that would be here, and you take profit on your long. Now there's some debate as to whether you should just perhaps let's say I'm just going to take profit every time we get a color change. Okay, that will work well, but you're going to have times where it doesn't work so well. So if I just kind of skip on to the next month here, let's get those lines off and do it again. So let's imagine that we're just going to close out our trades when we get a change in direction, and the trade's in profit, of course. So this would be your first long here, stop under the low, here, we get the change, take profit. Then we get triggered short, price reverses here, there's no profit to take, so we go into a hedge. The short gets stopped out, again we have a change, you take profit. We go short, stop over the high, change again, we take profit. Go long here, price reverses, this time there's no profit, so you take the hedge. The long gets stopped out, and here we take profit, change in direction again. Go long here, take profit. Short here, and this one you get a really nice drop down to the next take profit point, which is down here. Okay, so that's just using a fixed one exit. That will work. You're going to have months where it works horribly, but it's all about the long term. And if you pick a mix of say 3 pairs on the daily, you should make consistent profit just doing that. And what we're doing here is we're entering buys into the market when there's evidence that buyers are coming into the market. Okay, and we're only managing a buy trade when there's evidence that sellers are coming into the market. Okay, and that's distilling trading down to its core fundamentals and literally making it as simple as possible. Another way to approach it is to which is kind of what I'm doing on the H4 at the moment, is take your first trade long, and when the first change in direction comes, I'm tending to always take a hedge, okay, and then waiting for that hedge to break out. You see we break out of it here, the short gets stopped out, and we reverse again, and then on the second trade I'll consider doing a take profit or a stop and reverse. Okay, so now I close out my long and I've gone short. Next trade sets up and I take the hedge and wait for it to break out. Breaks out here, the long is a loss, and here's your color change again, so I take profit on my short. Long again here, first change in direction, I take the hedge and wait for it to break out. Breaks out here, and then at the next color change I take profit. So you can kind of be formulaic about it. I like to look at the individual trades and what losses I've taken and what my target might be for the week, although if you're trading daily you're going to have a monthly target, and then make my decision when the trade sets up. But there's no reason that you can't just say I'm just going to do stop and reverse, etc. How flexible you want to be with the exit is up to you. I like to be flexible, but the strict part of the rules is I'm only going to manage my long positions when I get a bearish close, and I'm only going to manage my short positions when I get a bullish close. Okay, it's difficult to do. It's difficult to stick to that because when you're in a winner, you're going to be fearful, and when you're in a loser, you're going to be hopeful. So you're always being pulled against making the right decision at the right time. But that's something that will come with practice. So that's just like a very basic outline of a way to trade the daily. But in essence, it's exactly how I'm trading the 4-hour charts. The only element that's different is I'm trading 3 pairs on the 4-hour charts and setting a weekly target. And when that's hit, I'm stopping. Now, that's for a few reasons, but I wouldn't say it's necessarily an edge over trading the whole period. But what it does do is, if you can set your target level well, then you can have more time off. And essentially most of us are trading to earn money but have freedom of time and location. Whether you decide to do that or not is up to you. Setting the level is down to the pairs you trade, doing some back testing, then trading live, keeping good records, and then adjusting that as you go, and eventually you should find the kind of right level to set your target at. So on daily, let's say you're trading the pound, yen, the euro, Aussie, and gold on the daily. You're going to have to go through them and find like a reasonable target that's hit a lot of the time, but isn't so low that when you have a really bad month that it's going to get wiped out. And if I just come down here to last month on the pound yen, you're not going. Let's just get rid of these. Okay. If we look at the last month on the pound yen, it was particularly unpleasant, and you're going to get these. They're unavoidable, and what you need to avoid doing is looking at these with hindsight and changing your management rules so these are less damaging. You've just got to accept that they're going to happen, and it's part and parcel of the game. But if you do your testing, you'll see that there's plenty of months where there's profit that's going to cover these losses anyway. But just to show you, here was our first short here, okay, and let's say we took the hedge here, okay, price came up, we took a loss here, and let's say we took profit on the long. Short here, it reversed and stopped you out, then long here, and I might have just avoided getting taken in there. You would have got taken in here. We just stop over the high, and then that did eventually break out, give you another loss here, and maybe you took profit here. So that would have been a tricky month, and you could have lost money there. But when you get stuff like this, chopping and making new highs and breaking out and new lows, then you're going to have a much harder time. But like I say, run some back tests, get some data, start with that initially, and then as you get some live trade data, adjust your levels and target accordingly. So hopefully that'll kind of get you on the way with a daily time frame. It's certainly not the only way to do it. Willem's got a different way of managing his daily trades. There's pros and cons to all the sort of variations. The key points to remember are the points in the flow checklist, okay, which is we're going to sell when there's evidence that sellers have come in the market and we break out, and we're going to manage when that bias changes by a color change candle. That's the basics. There's obviously more to it than that. Any questions, please post them in the forum or on the Facebook page, or you can PM me directly and we can go over your queries. Have a good weekend. I am going to do some more videos on the 4-hour time frame from this week, and of course I will see you all on Monday.